Hi, and welcome back to CMC Markets Trend Tracker series. What is top of mind for traders? It's US equities, it's gold, it's the Australian dollar. And I'll be covering what traders need to be focusing on in terms of events and key levels this week. First up, we have the US30 cash index. Now, US shares have been pushing higher on hopes of more confirmation from the Federal Reserve that rate cuts are coming at successive meetings for the remainder of this year. Now, if they don't hear what they want, maybe things could turn a little in the equity market. Later this week, Fed Powell's keynote speech at Jackson Hole Symposium will be closely monitored for clues as to the size of the first rate cut. In fact, expectations are high that the Fed will deliver 3 successive 25 basis points rate cuts at its September 18th meeting, then November the 7th meeting, and finally the December 18th meeting, for a total of 75 basis points worth of cuts. Now, that has been backed up by 2 recent comments from Fed members. Firstly, Kashkari, he mentioned that the balance of risks have shifted, so the debate about potentially cutting rates in September is an appropriate one to have. And that's important from him because earlier in the year, he was saying that a rate cut may not be warranted until the very end of 2024. And secondly, Fed President Daly, she mentioned that there's more confidence that we are on our way to price stability. Now, she mentioned and focused on the US economy and said it's not in an urgent place right now, and argued that the Fed's approach to monetary policy should be one of gradualism, so gradually cutting rates. Even so, the market is quite enthused about 3 rate cuts coming starting next month. Now, in terms of people trading the US index, the technical picture mirrors the fundamental picture, and that is we've got a very strong uptrend forming in the US Dow 30, and even stochastics. Stochastics are above the 80% level, which suggests that recent uptrend has been very strong. Now, support levels for those of you looking to buy dips, I would suggest a 20 EMA in yellow, around about 40,100, and the 50 EMA, 39,750. Be key levels to keep in mind. But also 38,500, where we had that mini meltdown at the start of August, which was sparked by softer US non-farm payrolls and the exiting of yen carry trades. So that event and these levels will be fresh in traders' minds. Resistance, well, we're very close to recent record highs of 41,380 made on the 18th of July. So those are the levels and events to keep in mind when trading the US equity indices. The gold price has also been top of mind for traders. Very strong uptrend on the daily chart, supported by stochastics oscillator above the 80% level. Now, gold prices continue to trend higher, making fresh record highs a few days ago, and we're above 2,500 US dollars an ounce, and we're above there right now as well. And this is on expectations of multiple rate cuts by the Federal Reserve and continued Middle East tensions. For those of you trading gold, if you're looking for levels to buy, there's strong support around the 20 EMA and 50 EMA in particular. Look at the 50 EMA blue line. You can see prices have bounced off that level since late June. So levels keep in mind going forward for gold, 2,445, which is the 20 EMA, and 2,405, the 50 EMA. They're levels to keep in mind. Now, in terms of resistance, well, we are at record highs, and stochastics are trending strongly above the 80% line. So therefore, for trend followers, they're most likely to continue going with the daily uptrend in gold. Next, we have the Aussie dollar. It's risk on. Finally, the Aussie has pushed above 67 US cents. Now, traders are cautiously optimistic because the Aussie has a habit of rising via the stairs, but then dropping down the elevator when adverse news comes out. But at the moment, trend's very strong, it's up. Now, speaking of news flow, last week, stronger than expected Australian employment data and hawkish comments from the RBA Governor Michelle Bullock have added strength to the Aussie's rally. The big negative factor remains weaker iron ore prices due to China's cooling property sector. So keep those things in mind when trading the Aussie. Now, support is 67 cents, that horizontal line there. And the EMAs that I have here, 20 and 50 EMAs, are about to cross over. Well, will they or won't they? The stochastics oscillator is again trending up strongly above the 80% level, suggesting that strong momentum is with this recent rally. But keep an eye on whether these EMAs do cross over and form a golden cross over the next few days. Resistance is important to look at. So for those of you trading Aussie from the long side, 68 cents most recently. And then if you zoom out on your chart and you look at the price action during calendar 2023, you'll notice that we've had a triple top around that 69 cent level. So those are the key events and levels to focus on when trading equity indices, gold, and the Aussie. Thank you for watching, and I'll see you in the next video.